Welcome to the Real Estate Show with your real estate and mortgaging team, Terry Kilakos and Merav Marciano on CJAD 800.
And happy Sunday afternoon, everyone. You're listening to The Real Estate Show. I'm your host, Terry Kilakos, chartered real estate and mortgage broker, as well as president and founder of Northeast Real Estate and Mortgage Agency. And today we're going to be talking about penalties. And I'm not talking about the penalties that you're going to get when you get together with your family for Hanukkah or for Christmas, you know, while cutting up your gobble gobble. I know, okay, it's not that funny. It was funnier before, but anyway. I'm talking about mortgage penalties. Joining me, we have my co-host, Merav Marciano, chartered real estate and mortgage broker and vice president, super extraordinaire of Northeast. Welcome, Merav.
Thank you so much. Were you talking about the gobble gobble who's like stuck in Montreal West? That wild turkey roaming around?
That's pretty funny.
I know.
So here's my question. If that turkey manages to get its way into your house, do you have to declare that when you sell the house that you had wild animals or like some sort of bird infestation?
That's a reach.
Excuse me, I'm choking here. Feel free to call us with your questions to 514-790-0800, or you could text into 514-800. And don't forget to write your name in the text so we can give you kudos. And if you haven't done so already, please take a moment to subscribe to our YouTube channel, which is newsonthego.ca. And you could actually watch us live right now on Facebook Live. Facebook.com/Northeast Mortgages. And I'm about to start coughing like any second because like I swallowed wrong my coffee. It's not COVID, people. Okay, before we kick off the show, let's talk a little bit about what's been going on in the market over the last little week. So the big news, Bank of Canada met this week. No big surprise. They didn't raise the overnight rate. Again, we're not anticipating that the Bank of Canada is going to actually be raising the overnight rate until well into either the tail end of kind of 2021 or the beginning of 2022. This is what they've told us. We can't obviously hold them to it, but this is something that they have mentioned in the past. So we'll see. On a more kind of bad note, if you will, the bond yields for the fixed rates are continuing to go up, even though the banks are having like these rate wars between them. Mm-hmm. So, I think that as they continue to go up, maybe in 2021, we're actually going to start to see the fixed rates start to increase a little bit. But again, that's not variables, that is fixed rates. And we had a whole show about this a couple of weeks ago. So let's see what's going to happen. I'm actually anxiously standing by to see where that movement is going to go. What's happening on the real estate side, Merav?
Every month we're saying it's going to slow down. It has not slowed down, honestly. Prices again for single family home, November of this year versus November of last year, up 23%.
Wow.
Number of sales from November of last year to November of this year, up 32%. As you know, usually November is a quiet month,
Yep.
So 32% more sales than we usually see in November. Number of active listings, we see it down 15%. However, we do see that in November, there's been 31% more new listings. So we do see people still putting properties on the market.
Even this time of year, which normally we see a slowdown occur.
Yes.
But you know what? This is normal. Okay, I know that. I know for us, a lot of our clients have reached out to us and said, you know what? We were thinking about listing our property in January. They're not sure what the government's going to be doing with respect to lockdowns and all that kind of stuff. And they're like, we might as well just list it now. So we've seen an increase occur because of that. Also, I believe that people, they didn't list their properties earlier on. And we've talked about this before on the air where they didn't list their property at the beginning of the year because of COVID. And they were worried about having people in their house, so on and so forth. And now these people are like, okay, well, it's time for us to list. And we're seeing an increase because of that. Mm-hmm. What's your thought on it?
Look, at the end of the day, this year to date, we've seen 27% less active listings than we've seen last year. So with respect to what people want to do, I think because of the uncertainty nothing is like the previous year.
That's
You know,
right.
you compare this month to last year, same month, and you don't have the same results.
Yeah.
So you're right. We're still seeing people putting up their properties on the market. We're still seeing people unsure whether they should sell or not.
Right.
So it's gonna be another few months that are gonna be strange in the
Yeah.
real estate market.
I do stand by my prediction. I believe that next year we're going to see, although that, in certain neighborhoods, we're still going to see a very strong seller's market. I do think that the market is going to start to become a little bit more balanced. And I think that it's for the simple reason that, again, the people that were thinking about selling their properties in 2020, who didn't list them, now all of a sudden are going to be listing them in 2021. Plus, you're going to end up getting the people that were actually needed to list the properties. And you're going to probably have some people that are suffering some financial difficulties, as a result of, all the lockdowns and everything that's happened. And they're going to have to list their properties, right? There was an actual interesting stat. I know that we didn't put it as part of the market update, but I do want to kind of bring it up where, RBC was announcing that there was an increase in the number of defaults, on mortgages and on credit cards. And that's, I mean, it's not up by anything crazy. It's up by 1.8%. So, there is trends, there is things that you can look at. But again, I want all of our listeners, and I want everyone that's, that listens to us and follows real estate, do not get kind of, how can I say it? Swayed by certain things. Okay. So, you hear RBC or you hear someone say, hey, defaults are up by 1.8%. But in the grand scheme of things, do you guys understand what that means? Defaults this year in 2020 were actually down, in part because people had gotten the deferrals, right? So people that might have had a default in their mortgage this year ended up doing the deferral, which doesn't help things, right? So by the time all of a sudden at the end of the deferral program, now all of a sudden they're actually defaulting in their mortgages. They would have defaulted anyways earlier on. The national default rate in Canada, okay, guys, listen to this very carefully. The national default rate is less than 0.5%. And it actually had gone down during COVID because of the deferrals. So when you see an increase, when you see the media or you see anyone reporting that there's something like that happening, always go and check what the real number is. That's going to put things in perspective for you.
I have to agree with that. The media does, it's not their fault. They get the information from a third party and it's their own interpretation.
Yeah.
And we've seen it. Rates are about to go up. Rates are about to go down. Rates are not going anywhere. House prices are dropping. They get it straight from, let's say, the finance minister.
Yeah.
So it's not their fault. They're reporting based on what they see, but you do have to have a little bit of
your information.
Yeah, a little bit of logic in there would be very, very important.
Yeah. Don't forget, again, when we're talking percentage points, it's anyways.
Yeah, I do agree. Versus the United States, where there's a much higher default rate.
So today's show, okay, I mean, this is, we don't have a lot of time to kind of get into it before traffic, but I do want to intro it a little bit. We've had a lot of clients over the last couple of months, because interest rates are so low, they're coming in to actually restructure their mortgages. So they want to go from having, a 2.99 to having a 1.99 5-year fixed. But those mortgages, when you're breaking them, they come with penalties. And not all banks are created equally. Not all penalties are equal. And this is part of the conversation that we're going to be having today, which I think is a very important one, because it's not, you don't get the right information necessarily from your banking institutions or from mortgage brokers. So we're going to give you the info, and then you could take it and run with it. You're listening to the Real Estate Show on CJAD 800. Now we're off to the CJAD Traffic Center with Jill Fitzgerald. You're listening to the Real Estate Show, and today we're talking about mortgage penalties. Feel free to call in with your questions to the show at 514-790-0800, or you could text into 514-800 in order to share your experience. And again, don't forget to put your name in the text just so that we can give proper thumbs up to you. So, yes. Penalties, Merav. Okay, so here's what I would go as far as saying 100% of the people tell me. But in reality, it's probably, 80% of the people they tell me, they come in and they say, I'm not thinking about, buying this house. I'm not planning on selling. I'm not planning on divorcing. I'm not planning on dying. I'm not planning on doing this. I'm not planning on doing that. So there's no change that's going to occur in my situation from now until 5 years from now. So because of that, I don't care if the mortgage is restricted. I don't care about this. I don't care about that. What do the stats show us?
More than 50% of borrowers will be breaking their mortgage between the third and fourth year. More than 50. And
that stat actually goes up to more than 80% will break their mortgage once you hit year 4. Mm-hmm. Okay. But yet people still believe that they won't do it, which again, I do have clients that don't change things in their 5-year period. I have clients that I see them once and then I'll see them again 5 years later, Mm-hmm. And then when I see them, life is completely different. New jobs, new kids, new everything. A lot happens in 5 years. But my philosophy has always been, when you're setting up a mortgage, although you might not have the plans of doing anything in the next 5 years, it's very important that you actually think about that and take it into account.
Yeah, things do happen in life. You've got divorces that you don't plan on.
Yeah.
You've got deaths that you don't plan on. You've got, sometimes we've seen clients get pregnant with triplets and suddenly that one bedroom doesn't suit them anymore. So things do happen. And you do have to, I'm always the type of person who likes to see the cancellation policy of any contract that I sign.
Yeah.
And I don't know, maybe I'm just extra careful, but, the idea of not looking at the fine print and saying, wait a minute, if I need to refinance, if I need to break, if I need to sell, what is the penalty? I think that's so important when you're signing a contract, and a mortgage application is a contract.
Yeah. And, you mentioned a lot of very valid and interesting, good points about why people would break a penalty. And that's typically the standard ones. But right now, what we've been seeing is there's none of that. But there is some of that. But the majority of people right now are breaking their mortgages to secure a lower rate. And I'm giving the example, even clients that I signed with at the beginning of the year. So I've had clients, they signed with us 289, 299, 279, all kinds of different rates. These clients right now are in the process of restructuring these mortgages so that they can have a 159 for a 5-year fixed, or a 189, or, whatever. There's a lot of different rates with a lot of different banks.
Yes.
And if you've signed a mortgage with restrictions on it, you're not able to do that.
Yes. We've seen mortgages that you can't even break.
Yes, exactly.
There's some that it's astronomical penalties, but there's some that you can't even break.
Yeah. So let's talk about what typically we're looking at when those differences. So, I'll give you the perfect example. I have one lender in particular, and our clients know this because I always give them the option. I say, you have option 1, you have option 2 with this lender. Option 1, you have, let's say, a 5-year fixed rate at 179. Option 2, you have a 5-year fixed rate at 174. Now, on the surface, you kind of look at it and you say, well, I want the 174. It's a 5-year fixed. They're both 5-year fixed rates. Everything is hunky-dory. But the 174 will come with a restriction that doesn't permit you to refinance or restructure the mortgage in any way over the next 5 years. I'm not talking
could be a problem.
Yeah. I'm not talking about paying higher penalties. I'm talking about, in general, they just don't permit you to restructure them in any way, shape, or form. The only thing that you can do is you can sell that property to someone that is at arm's length from you. right? So I wouldn't even be able to sell you the property to restructure the mortgage. I would have to sell it to a complete stranger, someone that is completely separate from me. And unfortunately, when you go online and you look at rate websites and you look at all that stuff, they advertise the lower rate.
They don't mention the fine print, and the fine print is so important.
Exactly.
And we've seen a lot of people get stuck with mortgages that didn't make sense. You save that $20 a month, but
It's
at
not
the
even
end,
in most cases.
and some cases it's
it'll-
$5-10. I do agree. I always say it's 2-3 Starbucks coffees.
Yeah, if that.
If that. But then if they want to refinance, if they want to sell, if they want to pay off some debts, if they want to increase their mortgage amount, they end up with a massive penalty of $10,000, $15,000. We've even seen as high as $20,000.
Yeah.
Was it really worth that $10 a month saving? And that's what you need to calculate with your broker or banker.
Absolutely, 100%. And it's very, very important. Actually, we got a text, and I'm gonna actually make a comment about this text because it's someone that's been trying to get a hold of me for a HELOC.
Okay.
And he's like, I sent you an email last week, but on the subject of HELOC, but I didn't get a response. I would love for you guys to send me, you want to email me, but you're better off calling the office. And you guys can call the office at 514-680-4674. I literally, in some days, I get 300 emails a day. And although I try and go through every single email, and Olympia goes through every single email, I actually have 3 or 4 people looking at my emails at any given point in time. Things do get buried, things do go into spam. Very, very, very important that if you guys want to reach out for anything, please call the office. Olympia will gladly set up an appointment, whether it's a phone appointment or even a face-to-face appointment, and I will be happy to answer any questions that you might have. And seeing as this texter was talking about HELOCs, let's talk about HELOCs for a second, because even HELOCs,
By the way, HELOC.
a home equity line of credit. Okay. So let's talk HELOC for a second. HELOCs, it's understood that when you break a HELOC, there is no penalty to pay. But did you know that that's not actually accurate?
Okay, explain.
So there is certain institutions, and I won't mention which ones, the HELOC comes with penalties associated to it.
The whole point is...
So I'll give you 2 different types of penalties that I've seen with HELOCs. Penalty number 1, we're talking about a HELOC that's not used. Okay, so let's say institution gives you a HELOC, they give you a fantastic rate on it, they give you all the bells and whistles, but if you don't use it, all of a sudden you're paying every single month a fee to have that home equity line of credit open, and that fee is $16 a month.
I have seen that.
Okay, so that in itself is a type of penalty. The penalty is for non-use of the HELOC. But then when you use it, you end up paying interest on it. And the interest rate is higher than what you would be paying if you had set up a mortgage. Okay,
Yeah, well, HELOC are usually more expensive than mortgages.
Yeah, usually 0.50 above prime. There's some that are 0.65. There's some that'll be a little bit less for certain professionals. The other type of penalty I've seen with HELOCs is when you cancel the HELOC, the bank will actually charge you a reinvestment fee. And it's not anything crazy. It's $400 or $500. I've seen $250. I've seen $750. But they are there, and you do have to be aware of them. When we come back, we're going to be discussing the fine print of mortgage approvals and how to be aware of your penalty ahead of time. You're listening to The Real Estate Show on CJAD 800.
The Real Estate Show is brought to you by Northeast Real Estate and Mortgage Agency.
You're listening to The Real Estate Show, and today we're talking about important things to know when it comes to mortgage penalties. Feel free to call in with your questions by calling to 514-790-0800 or texting into 514-800. And don't forget to write your name in the text, just like Eleonora did, and hopefully I pronounced that right. Hello, thanks for talking about this important topic. MCAP had locked me in 4.5 years ago with a variable mortgage at 2.1%. With time, that became 3.8%, but I could not break it unless I died or sold the house. We need to be extra careful. Lesson learned, Eleonora. Very, very true. And actually, it's funny because if you're watching me online, I'm actually wearing an MCAP hat right now. And MCAP is a fantastic lender. Okay, they're actually a really, really good lender, but they are a perfect example of someone that does have restricted mortgages. You can get really great rates from MCAP, but you need to look at them because sometimes for 5 basis points more, you're going to end up having a non-restricted mortgage. So it's
just
very
like
important.
just like those flights.
Yeah.
When you buy tickets, you can pay $15, $20, $30 more, and you're able to make changes to your ticket. If you want to go for the cheaper rate, you can make changes, and then when something happens, you say, "I
Exactly.
should have paid the extra."
The extra $20 or
Yeah.
$30 or whatever. Yeah. Sorry, I got sidetracked. I'm looking at the TV screens in the office and they're talking about the refrigerator trucks, and it actually reminded me of when we had a market research. So before I became a mortgage broker for everyone, I promise I'm going to get to the next text. I just have to share this because I was laughing to myself. Before I became a mortgage broker, I actually owned a market research company. And we used to do market research for all kinds of different institutions and banks and Ipsos Reid and Canada. Anyways, whatever. We did market research for everyone. And one of the market research that we had to do was some bread company, which
it
I
was
can't,
Pillsbury, I
I
think.
don't remember who it was, but somebody had mystery shoppers, and we had to deliver bread to them and then do the surveys to see what they thought about this frozen bread that they got. So I get the contract, and then all of a sudden this refrigerated truck shows up at my house and unloads all these pallets of bread.
remember that.
And they're like, where do we put them? Where's the fridges? And I'm like, I don't know. I don't have fridges. Anyways, it's a funny
Your
story. Thank God.
trunk. It was
Yeah.
minus 20 outside.
It was
Your
minus
trunk was
20, so there you
perfect.
go. It wasn't in my trunk. It was pallets. It was the backyard. We put them and I put tarps over them. Anyways, okay. Can you please explain the different types of penalties? I was shocked to be charged over $20K to break my mortgage. Yes. Okay. So let's talk about that. Back to business here. So there's two different types of penalties that you could be charged. There's what's called 3 months of interest penalty, which is a very simple calculation. You look at the interest that you pay on your mortgage on a monthly basis. You multiply that by 3. Boom, there's your
Simple.
penalty.
And
That's your
that's
simple.
usually have it for variables.
Exactly. You usually have it for variables, and sometimes you'll have it also for fixed rates, but it's not, again, always the case, okay, for fixed
They'll
rates.
always go for the higher of the two.
Exactly.
Based on the second one you're going to.
That's right.
Okay.
And the second one is called an interest rate differential penalty. The interest rate differential penalty is the one that has the teeth. It's the one that, I end up having people coming to me and they're like, my penalty's $50,000.
That's the one that
What do I do?
hurts.
Yeah.
Yeah.
So what is that? So let's say you signed a mortgage at $299 at the beginning of the year, and now the rates are at $199. That's a difference of 1%. That difference is what the banks base their interest rate differential on, okay? And they will charge you that as a penalty. Plus, if we're talking about the big banks, whatever discount you received on the mortgage when you signed up for that mortgage, they will also factor that into the calculation. So if your rate was $479 and you got a rate of $279, so you have a discount of 2% plus that difference that just happened, they add the two together and boom, there's your penalty. And that's why people end up with massive penalties.
Yeah, because they calculate it based on posted rate. That
Exactly.
rate that you're mentioning is a posted rate.
That's right.
It's not the actual rate that you got your mortgage at.
Yeah. And the reality, people, is that nobody, I don't care who you are, you're not going to walk into a bank and they're going to tell you your rate on a mortgage is $479. That's just the rate that is posted for the bank. But the reason why they post that is so that they can calculate their penalties off of that. And it's nasty. And if you don't believe me that the banks track that, why don't you go and pick up a mortgage statement, open it up and take a look and see if there's a little section that says discount received. And I guarantee you it'll say 2%, 2.1, 2.2, whatever that discount is. And that discount is used when they're calculating the penalties. And that's a nasty practice, which needs to be stopped as far as I'm concerned. But nonetheless, the banks have very good lobbyists, so chances of it stopping are slim to none. The way you get around that is you use a mortgage broker. So mortgage brokers, when we're dealing with banks or when we're dealing with, MCAP or First National or, all the virtual lenders of the world, we don't have that. We only have broker rates. So when you come to a mortgage broker and the rate is, for example, 179 that we're giving you, that is our rate because of the volume that we do with that institution.
So we don't have posted rates on the broker channel.
Exactly. We do with the big banks. So the big banks will still have posted rates. But we tend to go for the ones that are not going to give you those heavy penalties, right? So because of that, your penalty will be greatly reduced because they don't factor in that discount. And usually what we've seen, you're going to pay a penalty that's a quarter to a third less, or 2/3 less, I should say, than what you would have been paying at the bank.
And can we talk about those little gifts that the bank gives you when you sign up, whether it's notary fees, whether it's cashbacks? Those, if you break your mortgage, you have to pay them back.
Absolutely.
That's part of the penalty.
Yeah, and it's not prorated. It's not an amount.
It's the full amount.
Yeah.
They gave you $2,000, you have to give back $2,000.
Yeah, so there's one bank in particular that's very famous for giving fairly decent cashbacks when you sign the mortgage, and people get very enticed by it. So they're going to give them a $2,000, a $3,000, a $5,000 cashback, depending on the mortgage size, and they're like, oh, this is fantastic. The bank loves me. This is great. Blah, blah, blah. All that stuff. Then what ends up happening? You go to break that mortgage, and besides the penalty that you have, you end up having that cashback that's asked back from you. And the nasty thing about the cashbacks, and you have to be careful again, the cashbacks are payable up until the day that your mortgage is due.
Wow.
So if you break the mortgage, let's say a week before your mortgage was due, that cashback is due in full.
So you'll have a smaller interest rate differential to pay because you're closer to the end.
That's right.
But you'll still have...
You might not have a penalty,
Yes.
but you'll have to pay back that cashback.
Wow. So
Yeah.
a gift that comes with
Teeth.
with teeth or with hair.
Yeah. The thing that's important to really remember, guys, is that when people get together in a boardroom and they talk about setting up products and services and all that kind of stuff, they rarely are thinking about what a client needs. Okay. They're thinking about how they're going to put more money in the bank's pocket. Unfortunately, this is the reality. Okay. And people fall victim to it, whether it's for home lines of credit, whether it's cashbacks, whether it's anything like that. It's ways of you becoming married to that institution.
And locked in.
Yeah, exactly. It's deplorable as far as I'm concerned. It's not a good practice. It's not something that we do at Northeast, but it is important for everyone to really know. Coming up, we're going to be taking a look at when it actually makes sense to break your mortgage and restructure it. You're listening to the Real Estate Show on CJAD 800. Now we're off to the CJAD Traffic Center with Jill Fitzgerald. Thank you for tuning in today's discussion about mortgage penalties. Has big eyes. She's wondering.
I was afraid you're going to choke on your coffee again.
I'm drinking coffee. That's why I'm all chock full of energy here.
We got quite a bit of text, and we don't have a lot of time left. But definitely, it's a hot subject.
Absolutely.
We have a text from Fonderson who says he's going to call us next week, and he's asking about penalties. Do you pay them, or is it added on your mortgage?
So you could pay them if you choose, or you can add it to the mortgage. So, I'll give you a perfect example. I have a mortgage myself. I have a few mortgages, actually, but one in particular, which is for my home. It's with Desjardins. And this week, I actually renegotiated that mortgage, and I had a $3,000 penalty. So what did I end up doing? I just paid it. Okay, so you could pay it or you can add it to the mortgage.
So you can either add it to the mortgage, or some banks will even give you some sort of a blended rate in order to sort of collect that $3,000 somehow by having a higher rate.
Absolutely. That's usually if you stay with the same institution. But yeah, there's all kinds of different options that you can choose.
But the penalty is always paid.
It's always paid. It's always there somewhere hiding, in the bushes,
because
on the grassy knoll. It's there.
I've seen banks say, don't worry, we'll pay your penalty.
No, they don't pay the penalty.
It's absorbed somehow.
It's in there. Okay.
Yeah, I get it.
So somewhere, somehow it's in there. Always the case. Hello, I listen. Sorry. I know who this is because I went through the text, but it's going to be creepy if I say their name. So, hello, I listen every Sunday and get nervous. Can you explain what is an unconventional mortgage? Thank you. don't be scared. Don't have anxiety. Okay, we're nice people, us mortgage people. So basically, an unconventional mortgage is a mortgage where you're putting less than 20% down when you're acquiring a property. So if you buy a property and you've put 5% down, that would be an insured mortgage, not a conventional one.
Exactly. Up until 20%.
Exactly.
It would be insured. It's backed by one of the big insurers, CMHC, Genworth, which is now called CJAD, and Canada Guarantee.
Exactly.
And concerning the cash back having to be paid back, when you're referring to breaking the mortgage, are you talking about the term or the full amortization time? And there's no name to this text.
It's term. So it's the term of the mortgage. So if you had a 5-year, it's that 5-year period. It doesn't matter if you have a 30-year amortization. It's always the term.
And we have a text also from Frank. Question, I have less than 2 years to complete my mortgage and have to renew. They're offering me an open or fixed with CIBC. I don't know if it makes sense or if it makes any difference.
So open or fixed, I'm going to assume that he's saying variable or fixed because that is something that comes up all the time. I would go with a fixed rather than going with a variable, although the variable with CIBC chances are will come with a lower penalty in the future than the fixed. Variable is going to serve you well for the next couple of years, but then it will start to go up. And when it goes up, it's going to be going up really fast.
So the answer to Frank is really, it all depends what your future plans are.
Exactly. Absolutely.
We have one more over here.
Yeah, so we have one more. Terry, I'm curious, when you renegotiated your mortgage, did you renew with Desjardins? Yes, I did, actually. So my intention was not to, I actually had less than a year left on my term of the mortgage. I was sitting at a 279 on a 5-year fixed with Desjardins. We were the ones that had actually placed it. Actually, my beautiful wife here was my mortgage broker in that transaction, which is pretty cool. So with Desjardins, we had a 279. I had the option of getting a 179 for the renewal. Well, it wasn't a renewal, it was a break. I didn't want to wait a full year until next year to do it because I don't know where rates are going to, I know where they are right now. And I did a calculation. I said, okay, penalty is going to be about 3,000 and change to break it. I might as well just pay it and move on. Interestingly enough, though, had I moved institutions, the penalty was double. My penalty would have been close to $8,000 doubles. $8,000. So yeah. So, and then we have somebody from Linda. I have a feeling she's a financial advisor. Why pay $3K net, like $6K gross, instead of putting $3K in RSPs or TFSAs? Linda, I max out my RSPs every year, Linda. Hope that answers your question.
I think at the end of the day, the penalty is always a calculation that we do with the customers to say, does it make sense?
Yeah.
How much you're going to pay? What are you going to do with this money? Does it make sense? Are you going to increase your cash flow? Are you going to pay off some toxic debt? Are you going to pull some money out to buy another property to help your child buy a property?
Exactly.
Are you going to do some major renovations that are going to increase the value of your property? So this is what we do as brokers. At the bank, unfortunately, they'll say, okay, here we go. Let's calculate. Great. Here it is. And that's it. We actually do the exercise of, we go through it and say, what are your plans? What are your immediate plans? What are you going to get out of it?
Exactly.
And I think that's what you really need to calculate. And Linda has a good point. Sometimes it is to take that money and put it into RSPs, TFSAs.
100%.
It all depends on what the plan is.
100%.
Everybody has a customized plan.
And, I'll give you a perfect example. It's actually one of the strategies that a lot of our clients are employing right now, where they say, you know what, we have a penalty to pay. Let's not pay we're not going to pay that penalty. We'll blend it into the mortgage. We'll take that money and we're going to put it into the RSPs. And then by getting that tax refund, now all of a sudden it offsets that penalty that you paid. Penalties, Linda just texted, she's a divorce lawyer. Linda, I don't put them in my RSPs because Merav can take half of them.
That's
I'm
hilarious.
kidding. Okay, so I lost my train of thought.
We love you, Linda.
So here's the interesting thing, okay? Mm-hmm. Unfortunately, banks, mortgage brokers, financial advisors, everyone is going to make you believe that when you're talking about breaking a mortgage, that it is all kinds of shades of gray, 50 shades of gray. Okay. It's not. It's black and white, actually. And it's very black and white. This is what it cost me, okay, to break the mortgage. This is my penalty. These are my fees. This is everything that I have to pay to break the mortgage. This is what my balance is going to be in 5 years if I don't break my mortgage, okay? If I break my mortgage, this is what my new payment is. This is what my balance is going to be in 5 years. And this is what it's going to cost me to do that. Am I ahead or am I behind? If you're ahead, you do it. If you're behind, then don't do it. And if you're breaking even, don't do it. Because it also doesn't make sense to exchange 4 quarters for $1. You don't want to go through that whole hassle and the whole, banks can be pretty intense sometimes. So it's just very important to do the calculations properly and kind of go from there. Make sense?
Yes, and we do have more text, but
we've run out of real estate. So if you guys want to get a hold of us during the week, you can call us at the office at 514-680-4674.
Or online at www.nordest.ca, or you could always find us on Facebook.
This is our last show for the holidays. Guys, till next year, I love you all. Have a blessed holiday season.
Happy holidays.
And happy Hanukkah to all our Jewish listeners.
And Merry Christmas, seeing as we won't see you.
Bye, everyone.